originally at least, with software names in the portfolios of large private credit funds, lending that has taken place there, and whether over time those loans will not be as strong as to be when they were underwritten. Which gets to redemptions. Of course, this continued redemption cycle we've seen for many of the private credit funds where their investors ask for more money back than the charter of the funds allow. Typically, it's 5% for a quarter. Apollo, the latest, it's a large fund. They're a debt solutions fund. Second quarter, they say, talk about gross inflows in terms of the first half, $1 billion, but they also did receive requests to redeem almost 17% of the outstanding shares. That was as of the end, of course, of the last quarter. And they go with the 5% shares outstanding, which they typically do honor. And that represented about $700 million of gross outflows. And then they sort of go overall numbers. $400 million total outflows to the plus they allowed. All of those who wanted to get out, the outflows would have been larger. I did talk to Jim Zelda, the president of Apollo, yesterday. Now, this was prior to learning about redemptions, about Apollo Debt Solutions. We spoke yesterday morning. The news came out after the bell yesterday. But we did talk about the redemption cycle in private credit. One reason why Apollo stock price has not been a good performer this year. Take a listen.
I think that the noise in private credit, ironically, the actual performance of the vehicles year to date is quite strong, not only in our vehicle, but several of our peers. So the actual performance in 2026 does not match the concern about redemptions, because that really is an issue that will be identified over the next 2 to 3 years. I think that the current wind is to our back between what's going on in the overall economy.
Pretty wiki to start here.
Those are an indication of a strong economic background.
Pretty wiki.
In the U.S., the capex cycle is strong. The M&A market is strong. There's a risk appetite. So I do think private credit is under a little bit of a cloud of the redemption cloud. But I think that's over the next 2 to 3 quarters that will work its way through the system.
We are seeing some weakness in those overall names, although not as much as we've often seen when we get this kind of headlines around the latest redemption requests with the latest private credit fund. Again, this is a large one, so worth at least a bit of a focus this morning.
Yeah, I mean, the market seems to have learned that this is not some kind of, systemic issue, not something that the overall market's going to panic about. But it does raise questions about, the forward-going asset gathering and these firms that have attempted to, win market share over the overall traditional financial assets, and these engineered structures and everything else that we needed. The world has yield now. Private credit grew up in a time when the world didn't have yield. I mean, you couldn't get paid for managing fixed income. You still really can't. You can get paid very well for managing fixed income. So the solution was, we're going to give you special access to higher yields because you're worthy of private credit. And now I just think people are wondering if it's worth the lockups and the liquidity in the short term. It's not like the businesses are bad, or even
there are plenty of opportunities for which they can apply their capital, as we know. So both the conversation yesterday with Zelda, given the seemingly endless needs of the hyperscaler, for example, and everything associated with the AI build-out. Obviously, Apollo, their latest $35 billion, and they advance for the chip ambitions of both Broadcom and its client as well, Anthropic. So, there's endless need right now for capture. And they're a beneficiary, conceivably, of that if they obviously allocate it properly. Questions so about previous software companies. By the way, Apollo having actually pulled back from that sector more so than many of its competitors some time back. Overall, continue to see some weakness here. We've got the NASDAQ down 2%. With those SpaceX shares continue their decline down 2.5%.
That was a nice long right there.
$5 a share.
Down in here.
Shares kind of crawling back.
Really nice long.
I mean, you're talking about a stock down 21% for the year.
But Holy Grail does have a short, so it has it against 735.50.
made the big when they had the deal go by Warner Brothers. It's never recovered because it has raised this larger question as to the growth rate in terms of whether they really need to do something. As they said many times, it's not a must-have, but it's a nice-to-have, and obviously it's not going to be something they have. That said, there continues to be a big question as to whether there was something else out there for Netflix.
After Fox Roku last week, I saw some notes of like, who's Netflix going to buy?
Yes.
Well, there were reports that Netflix was involved.
Nice buying wick on Nvidia there.
At least in any serious way, based on my reporting. By the way, shares of Fox also just have been,
Oh, that's a 52-week low yesterday.
straight down, straight down. Now you're not going to get, there's no votes there. You got
That was your long though right there. I just missed it.
Anthony Wood controls the other side as well, so I'm not going to have it in terms of anybody trying to push that off, despite what has been a terrible reaction amongst Fox shares.
Netflix is an interesting, it's a 45% drawdown. We were talking yesterday about Google's investment in A24, Meta getting interested in subscripted. I mean, the space is getting.
They've been put into the disrupted bucket. Whether that's right or not, that's the way the market's trading Netflix right now. So they're just trading away that premium valuation. And even if whether the Roku thing happened or not, it feeds into this suspicion that Netflix at least has felt that it maybe needs another answer to what's going on right now and what it's spending on scripted. And now that it's the incumbent, it is the incumbent in internet TV. And after all this,
Pretty high ATR too.
it's funny enough that they have, but obviously that's where Netflix comes from.
So just be careful on size.
For these local areas that don't want to data centers, the data centers that's what creates Netflix. It creates Netflix. It's just servers. In other words, it's not like we just discovered data centers with ChatGPT. They've been out there for a long time. Super Jews runs by doing higher power stuff. I just think that's higher power. Big key. Yesterday, that announcement ship like 6, 7 gigawatts. The numbers. Yeah, that's more they said. My pockets by a data center that has multiple servers. Did you remember the days when it's like Netflix consumes a huge percentage of Amazon cloud services? You know what I mean? So, we were talking about that years ago. That's data center out. So this the now was the business. You can actually find more service space for West Virginia. Can that actually improve the natural gas turbines that these are the data centers right now that are only 100 miles away. Yeah, by the way, cats down which we talked about yesterday. Yeah, here, consumer, Q3, these downgrades of Nike, Wolf cuts Ross, Wolf cuts Depot. I think everybody are coming up to mid-year, and you have to say if the next 6 months going to have C2 the last 6 months in headwinds. I think that's what it is. It's just here we go. The get hand to somewhat, they're going to really cut growth, and the idea that you're not going to have the potential for windfall and things like that doesn't change the overall back.
I really should have been long from down there. That's bad on my part.
It's getting a bit Salesforce up to the market down inches until further notice. It's just positioning readjustment because you have massive divergence between winners and losers, and that's getting
Not the consumer stories. I think they're unique. It's not really massive for everybody. Downgrade, for instance, that report was basically okay, one of those 2 years into the turnaround, and we're still seeing signs of beginning to fall.
first thing was down like 8.
Gotta be careful, really like sinking your teeth in longs here though.
Execution issues, basically at the first point is that
Just because it is heavy and it can just reverse on you.
that was the night story on Carnival. The Carnival is actually been a big winner as oil prices go down and gas prices come down as this deal, has materialized. Carnival's up like 10% in June. It's up 20% since April during the peak. And so the miss clearly not what investors want to see. But the company still talks about being demand for the second half higher than the first half and higher than they were last year. They also mentioned an extreme geopolitical volatility that impacted big trends, specifically in Europe, European deployments. So that's why that company is getting back in some of the
At this point in the 52-week lowest yesterday, which routine McDonald's and McDonald's are two McDonald's are the 52-week low this morning. Yeah, I mean, ultimately, software, ultimately, you have to right? And then he has one traditional defense. It's been one thing. It's been for some reason, even when they're up 10, he's managing to work towards the market with signals. It's, you know, saving. You got small to 7% dividend yields, and nobody wants to even give them a second look. Things will have to get wrong from the market or tips of the economy. If that's really last, but yeah, exactly. No.
Financial just like free, they're opportunities, benefits, they're dead.
So it's just you're trying to do the job here today, down to the so we're talking, we're going to accept the advice, crossing the table. Let's get to Rick Sanzell.
June PMI. We're looking at manufacturing service. We have a composite. We're expecting 54.6 on the manufacturing. Comes in better than expected. 55.7. That would be the strongest since May of 22. And basically, we've had several plus months where that is the comp, as we see manufacturing in many ways, some anecdotal continuing to firm up. On the service side, also would be 51.3.
I'd like to see a little pullback on ES.
51.7. And finally, on the composite, 52.2, also better than expectations. 52.2 would be the best since January of this year, so the second highest of the year. And not only are all three better than expectations, Carl, they're also sequentially higher than our last look, our final read for May. So we are looking at yields coming down, oil coming down, dollar to 13-month high, and 10-year yields, well, they're moving down. But maybe the story was that 2-year yields closed at a 16-month high yesterday, and now they're down about 4 basis points on the day. So I'm going to still return after a short break.
Brought to you by PIMCO, a global leader in active fixed income.
Taking a contractor. It's not covered by homeowners insurance. That's why you should have HomeServe.
Diversity.
Your water line breaks. HomeServe sends a qualified contractor to fix it and pays for the covered repairs. With HomeServe, the American dream of owning a home doesn't need to be a nightmare.
Plans from HomeServe start at just $4.99 a month.
Call 1-844-893-9924. Visit HomeServe.com.
Hi folks, I'd like to tell you about Y Refund. Did you know, as an accredited investor, when you invest in Y Refund, your interest rate is fixed? Did you know that you can invest for 1 to 5 years? You can spread your investment over those terms to best suit your needs. And you have the freedom to take your money, interest, passive income, or reinvest, whatever you choose. When you invest in Y Refund, interest is calculated daily, and you're paid monthly. Just call 877-80-INVEST. That's 877-80-INVEST. Or log on to investyrefi.com. That's investyrefi.com. See details. Make sure to review the private placement grant. Scan this QR code. Review the disclosure segregation. Y Refund. Investing in America's future.
Just a kid.
didn't train me to play golf with PJ Tour, so to be able to come out here is really a cool feeling. And you're right, not way up to the top. It takes just as much work, if not more.
Golf champ hat today.
We are getting close to the end of the Supreme Court's term. There are still almost a couple dozen cases still left to be decided, including possibly today. We're on Scopes Watch. There's some decisions at the top of the hour. Some of these decisions may have seismic effects going forward. We'll look for that. The Dow trying to come off the opening lows down 61. Don't go away.
Is shrinking. The number of private companies is increasing. That friendly temperature. Access to
University of Maryland Global Campus, our students know that every new skill they learn is a new opportunity to move their career forward. That's why we offer an affordable, skills-based education that helps working adults adapt to the growing demands of today's job market. Their abilities in communication, critical thinking, or leadership, UMGC helps you advance your knowledge and career so you can succeed again. Learn more at umgc.edu.
Central Coast Market Edge.
A very busy overtime.
The economic impact is just beginning.
Same pushing.
NBC.
I love my work caring for people, like women who struggle with urinary incontinence. At home, I care for my mother with the help of the innovative PureWick system. This external system uses a soft, flexible wig plate outside the body to draw urine away from the body and into a collection canister. It's not invasive and designed to stay in place and help keep the skin dry.
Order yours online at purewickethome.com or call 800-405-0899 today.
Every great day starts with your gut. Try new Glucolex gummies for daily gut support. These stimulant-free magnesium gummies help your gut. New Glucolex gummies for daily gut support. Every great day starts with your gut. Try new Glucolex gummies for daily gut support. These stimulant-free magnesium gummies help your gut run smoothly. New Glucolex gummies for daily gut support.
Some fears about AI debt taking a toll on some of the mega cap names. Let's get more this morning from our Kate Rooney. Morning, Kate.
Good morning. So yeah, a big part of this tech sell-off is sentiment right now. There's some renewed anxiety around AI spending by tech giants and this growing role of debt in that entire build-up. Reminder, these companies are expected to plow $750 billion into this AI build-out. Just this year, it's up about 80% from a year ago, and they're depleting cash at record levels. Goldman recently noted CapEx, if you look at it as a percentage of free cash flow, that is at its highest level since the dot-com bubble. The dollar amounts are not necessarily new, but in recent weeks, we've seen more fear around debt in this entire build-out. That has been the big headline in recent weeks. SpaceX yesterday turning to the bond market. That was the latest example. Google with one of the largest debt financing rounds in this cycle, I should say. Alphabet, parent company of Google. Oracle also raising debt, is expected to see negative free cash flow this year. And then there's Amazon, widely forecasted to see negative free cash flow, and has laid the groundwork recently to tap credit markets with the shelf offering. So that's essentially pre-approval from the SEC to do that quickly. With this new debt load, the effective rise in rates could start to move upstream to mega cap tech. The group really needs to be immune from the bond market thanks to their fortress balance sheets, and this could make them more sensitive to rising rates. If you look at the 10-year, it's just below 4.5 this week. Another topic that's weighing on big tech this week, cheaper AI models. So that is adding to the same entire question about if tech companies are just overspending here. Microsoft reportedly now considering offering access to the ultra cheap Chinese model DeepSeek on its platform. Also, in recent weeks, has unveiled a fleet of its own discount AI models. And then finally, one market dynamic is playing out as well. JP Morgan recently noting the Max 7 stocks have become a source of funding for their clients. That tends to be part of why the names sold off, at least if you look at this month so far, guys.
Yeah, not to mention, of course, the equity also raised by Alphabet, the prospect perhaps that we may see other equity raises as well. And as the need for cash just continues. It's funny, I constantly come out my own line, Kate, to my time at that data center in Michigan, just thinking about just $50 billion just for that. Just one data center. Obviously, 1.4 gigawatts is not nothing. It's a lot, but nonetheless, what the return parameters will ultimately look like on the $50 billion invested just there, let alone across the industry.
No, it's a great question. I think the visual of Sam Altman with the excavator behind it says it all. The numbers are eye-popping just for one of these projects, and there's been no signal, at least from OpenAI, for example, that there's any appetite to slow down. I think the spending is known. They have made no secret, at least when you look at the hyperscalers. I would put OpenAI in that category, that they want to spend big. They have absolutely no ambitions to spend less. And I think in a weeks like this, it's interesting how quickly the sentiment can change around this, because it's known what they're going to spend. It's just a matter of how the market reacts to it. I think the debt question in all of this seems to be sort of the behind the scenes factor that's adding to this. One investor I talked to yesterday said the SpaceX example sort of called into question, wait a minute, they're probably going to lean more on debt. Amazon is seen as sort of next to go in tapping debt markets. I think there's questions. I mean, debt, of course, doesn't dilute shareholders, but there may be an aspect of investors trying to get ahead of more debt raises and selling out of these names on top of sentiment.
Interesting too that Moody's gave SpaceX investment grade this week, which is getting some chatter. SpaceX gets back to 155. Hey, thanks. Watching these markets here as we try to come off the opening low. Stay with us.
Yeah, it's just too big. Bring on the double. After my hospital stay, I'd like to close the gap. I pay you cash for expenses. Health insurance didn't cover. Nothing covers tax. That can be like that.
Expenses health insurance doesn't cover, but ask about it at work. You do look like
Sumo America's open for accommodations and transportation are provided for the LPGA pros. That's because Sumo is committed to enhancing the player experience in just one of the ways we're changing the game. Sumo America's unpaid with knowing.
It's time for a new bath or shower, but you can be faced with a hard choice. A luxury stone breaking your budget, or the thin plastic shower surround that only covers up the problem. Now there's a better way. Introducing Reveal by Kohler, a remodel service that combines the convenience, luxury design, and value that only Kohler can deliver. Kohler stone walls are corrupt-free, made from real stone, and installed in as little as 1 day. Plus, your parts are backed by a Kohler lifetime limited warranty, so you know they're built. Now you can have it all. Safety, convenience, and grout-free walls made with real stone, all within your budget. The choice is easy. Reclaim your shower today. Don't just remodel. Reveal by Kohler. Schedule your free design session now and get no interest and no payments for 1 year. Plus a free shower door. Reveal your shower's true potential at revealkohler.com or call 800-280-2356. That's 800-280-2356.
The Korean effect that we've spent years building a business that is around the founder really puts us in an unusual spot to help.
We actually help them understand that the lifestyle that they're going to have in year 1 is going to look a lot different in year 3 and year 5, and we need to help them evolve as they kind of go through that process.
The idea about having us co-pilot structuring, and then of course the life after the deal, but the deal itself has been something that I think is invaluable and hard for them to find someone else like us.
Damn, that was a really nice long. Sucks, I missed it.
Where the energy of open alkaline is thriving.
Tuesday morning, welcome to Squawk on the Street. I'm Sarah Eisen. Welcome to me. I'm David Faber. We are live as always from Post 9 at the New York Stock Exchange. Technology stocks are tumbling today with major declines for the chips and AI-related names. We'll talk with tech analyst Ben Wright says about the carnage right now. Your software is outperforming this morning as the money rotates in back into that.
Sheesh.
And they ring the bell to mark 10 years as a public company. Also, SpaceX just turning positive after briefly dipping below its first trading price on IPO day. What's behind all this volatility? It's one of the final Supreme Court opinion days of the session. We're still awaiting a potential decision on President Trump's authority to fire Fed Governor Lisa Trump. Any headlines as soon as we get them. But tech is firmly in focus today, and there are questions about how much is overdone when it comes to the AI trade and the tech trade. Barclays, interestingly, out defending the rally, defending the tech trade, raising their forecasts on the S&P 500, and just wanted to give you a snapshot of what's happened with earnings expectations in this very hot sector. So at the beginning of the year, going into the year, semiconductors were thought to grow earnings 66%. Today, the expectations for earnings growth this year is 127% for this group. And then you see it trickle down from there. The tech hardware and storage, the Dells and the
God damn it, Andrew.
Earnings growth this year expected.
Really nice move here.
Not just going into the year. Obviously, software, it's been a story the opposite direction. And so same with IT services, the Accentures of the world. But that is a defense, and they say, Barclays says, that earnings estimates for tech over the near term are not overly heroic. So if you want to defend, what's happening with the price action, you look at a chart like that, guys. But I guess, David, the question is how much is factored in, and where does that demand level off, I guess. Why is there?
Yeah, I mean, there's no diminution that we can really identify in a real way. That said, these concerns are going to continue to potentially bubble up around. I don't know what it'll be next, around whatever may be concerning. And then you get to valuations, Sarah. You've talked about this obviously many times, and you can look at some of the biggest companies in the world that are
Damn, that's such a clean move.
You can look at NVIDIA for that, because what I'm showing you is that the earnings expectations are so high, which is directly to your point, that the multiples, are not crazy, even though we've seen this tremendous price run up. Forward 1 year PE on NVIDIA right now is 23. Yeah, 23 times earnings.
Although to be fair, chip names often never get to market multiples. That's very
I don't know what Micron's multiple is now. I know it's higher than it has been, but it's still obviously well below the market. That said, the thing does have a $1.2 trillion market value, which is stunning. Even with the stock down 90% today, we are going to be hearing from Micron tomorrow
on earnings.
And it is important to note that did have weakness. Of course, it came up very quickly, but it did have weakness following its last earnings report, despite it being incredibly strong. Back to sort of the questions that will continue to
chip shortages
that will be out there.
Yeah, 800% now.
How long can the demand last? When is it finally? When are we going to start to see somebody cry uncle and say, "I can't do this anymore"? You're keep talking about the bond market. Will there be a point at which even there's some questions raised in terms of the ability, even of these incredibly large profitable companies, to continue to borrow and spend?
And I think one of the other biggest questions that's always been out there is how much demand is there on the enterprise, on the other side, right? Because that's how it all has to work, right? All these data centers, they get all the money that's being invested in the memory. If there's no demand on the other side, and here's a great chart from Torsten Slot from Apollo this morning. So he looks at ramp data that's out today, showing, the top 1% of companies spending on AI. So the biggest spenders, right? How much are they spending per employee? About $7,800. That's subscriptions, API access, usage costs, captured from corporate card and invoice payments from Ramp and Apollo. Okay, the top 10% of spenders are only spending $611 per employee, and the median of corporate AI spenders, those who are spending on AI, are only spending $11 per employee at this point. So it is.
Do you think the rest of corporate America to get where the top 1% are? Is it because there's simply the diffusion of the AI in the enterprise is very slow? Is it because they haven't really adopted it at all amongst many of these companies?
It's not moving as fast as the spending is moving. And
whether they're seeing weaker ROI, that's a big factor for corporates to consider, or it's expensive to do, or they're just not seeing the productivity gains. Those are questions that we're going to be asking of every single CEO. And then the other question that Apollo raises in this is, will they shift to cheaper Chinese models ultimately?
Right. Or again, Satya Nadella, the CEO of Microsoft, discussing the ability perhaps to commoditize the models to some extent, so that you offer the right model for the right task, which may bring costs down. Remember this cost per token we talk about so often as well. We saw Uber responding to how much its employees were spending not long ago and saying, wait a second, we got to figure something else out here in terms of at least bringing some of that spend down as well.
So this is the debate. This is what's in the narrative. Right?
It is. And it will continue to be, because we're not going to have the answer, because this is something that's playing out over many years to come. Many of the data centers that we're talking about are not going to be completed for years to come. The electric grid that needs to, the electricity provisioning needs to take place. I mean, so much of this is still going to take place in 27, 28, 29, and then the diffusion of AI through the enterprise. Now, what the impact obviously will be on employment. Back to sort of the macroeconomic picture that you cover so closely for us, Sarah, as well.
And also on inflation, on productivity. I mean, that's the whole game. We'll talk about it every day.
Every day. To replace it by simulations. Yeah.
Joining us this morning, talk more about this sell-off, at least overseas, is Bespoke Investment Group co-founder Paul Hickey. Paul, good morning. Good to have you.
Good to see you, Carl.
So, how important do you think the action overseas overnight was?
I think it was a continuation of what we started to see yesterday. And, we've seen these types of moves. The Kospi was down 10%. It's had like 5% declines just this month alone. So these types of moves has become an increasingly volatile index. So I wouldn't read a whole lot into it, except that it's the same driver of what's the weaknesses here. These tech stocks, especially in the memory sector, got way ahead of themselves, and they needed a breather. Coming into today, every sector except technology was underperforming the S&P 500 on a quarter-to-date basis, and that's just an unsustainable pace. So I think it's more of a rotation from what's just become some extraordinary market moves. The stocks was up over 90% quarter-to-date heading into today.
Right. So then, when you think about Micron tomorrow as a catalyst, what would be reassuring? What would be worrisome?
Well, I think it's all about the reaction, because we know if they're going to have blowout results, it's going to be on par with some of those NVIDIA results we used to see a couple of years ago relative to expectations, which were just, completely blew the roof off. So we'll want to see the stock reaction. You see a pullback into earnings like this. It's actually a little bit healthy. Helps to set the bar low, a little bit lower coming into the report. So I think it's a welcome decline. We want to see this rotation into other sectors of the market. Tech again, just earlier this month, coming into June, the tech sector was 10% above its 50-day moving average for over a month. That's just practically unheard of. When you've seen those types of moves, it's only happened a handful of other times. You saw weakness in the sector, especially over the short term. So this isn't much of a surprise. And we want to see this rotation and broadening out of the rally. So I think this is all perfectly healthy today. We're really interested in the consumer sectors here. Oil prices declining, gas prices declining. The economy is doing well, as we saw these flash PMI readings hitting a 5-month high this morning. So I think that does suggest that we should see broadening. So in addition to the consumer, we want to look at the industrial sector, and we want to look at the financial sector for other opportunities.
If you think this is healthy and you're sort of reloading here on the AI trade, Paul, I do think it brings into focus where you want to be as part of it, because Max 7 has actually been underperforming for a while now, the hyperscalers who are investing so much in AI, and the outperformance has been, I read today, of the parabolic 7, those that are benefiting from all the spending, the Microns and the Dells and the AMDs and Broadcom and those names. So where do you want to be, and where's the leadership right now?
So, I mean, I think what you've seen is you've seen tech has hit new highs since that high, late last month or earlier into June. So the tech sector's been in improvement mode. The equal weighted S&P 500 has been holding up better. It's hit new highs more recently than the tech sector. So we have seen that broadening. We have seen that move into some other sectors of the market, notably industrials and financials. But then also look for some of these consumer leverage stocks to do better as gas prices decline. There's lots of concerns after last week that the Fed is going to start hiking into year end here. And it's just so fast how these narratives switch. Last Tuesday, Kevin Warsh was, the ultimate lapdog for President Trump. And now he's the reincarnation of Paul Volcker. So, I don't think that the Fed is going to be hiking rates into the midterms. And especially, we're going to have to see how these oil prices play through. The average oil price in May was $98 a barrel, down to 73 now. So that's going to have an impact on the inflation numbers. Maybe not the PCE number this week, but inflation numbers coming forward over the summer.
Although there's a piece on the tape this morning, U.S. workers lose buying power after the war drives up prices. Are you more constructive on real disposable income growth for the back half than maybe the street is?
So that headline is basically we're looking back at what we saw, in the run up in the spring. That definitely had an impact on consumer wallets. But through it all, retail sales held up very well. The PMI data we're seeing again today, as I was just mentioning earlier, has been accelerating. So I think if you do see these oil prices decline, the whole, like we've seen now, you're showing $72 a barrel. If we stay at that level or even decline further into the summer as more supplies come on, I think that's going to be a real tailwind for the consumer heading into the fall.
Yeah. We will see. I mean, we mentioned the raft of retail downgrades that we got today. Some of them might be episodic. We'll see if it has any broader implications going into the back half. Of course, we're going to get through these earnings in a few weeks. Paul, thanks. It's always good to see you. Thanks, bro.
Here's our roadmap for you for the rest of the hour. Still ahead, a warning on AI accuracy. That is former head of news, Campbell Brown, raising a big red flag about the reliability of the most popular model. She'll join us to explain why.
Plus, we'll have a lot more on the sell-off of many technology names. We're going to be joined by the East's head of technology research, Ben Rices.
And the CEO of Twilio is with us after ringing the bell today as the stock outperforms this year relative to some of these software peers. Squawk on the Street is back in just a minute.
When I started Long Dogs, God bless us, I didn't know how to turn all this fancy prettiness into a classic looking logo. But the way a hero does, with its magical AI powers, it not only creates it, it slaps that sweet thing everywhere.
Volatility ransom. Millions of investors are turning to options. Jubilant Venus, you're going to well. More free coffee now at it's not an option.com. It's not an option.com.
St. Jude, we do it because every innovation we make is the moment we give the children with cancer everywhere. We can't do it without you. Children with cancer in moments that can last a lifetime.
This agreement does say to the Iranians, if you're willing to give up that program, we reinvite you into the immunization.
Removes the real, I would say, downside risk is off the table to an extended hyperinflation run.
A new era in independence is buying themselves some time. It's unlikely that rates will be changed until the fall.
We plan ahead down to the tiniest details. Our 5-year price lock guarantee means your price stays the same, even when everything else changes. We also give you free Wi-Fi equipment, plus advanced security to protect your home network. Sorry happens. And bundling Pop's internet and mobile means the savings keep coming. So the party keeps going. That's how we keep you a step ahead.
There's no
Spencer's is going bigger than ever. America's $250th birthday and store-wide savings at all 11 Spencer's locations. A spectacular rise on the multiple appliances. Soon up this giant whirlpool washer and dryer pair. Each will pay $477 with this Whirlpool stainless steel refrigerator, just $1077. On an elevator just till 2028. And in next day delivery, celebrate and save at Spencer's. It's like having a friend in the business. Just now, positive power. The former success spent still a bit of a difference in touch here. It's J&J, Procter, some leading names from down. Said, oh, this is one of the makers. All the makers of the chip makers is from prices. Man, I got curious as to the conversations you had this morning in the night. These clients, they asked me, what are you talking about?
If these have been opportunities in the past, we just see any change. I mean, Korea, there's a lot of things going on in Korea. Korea's where a lot of the memory is, and a lot of these ETFs get crowded, and the trades get crowded on any day-to-day basis. But these types of things occur over time. There's other things like overnight. And some of the memory articles, it's HBM is being shifted to DRAM, and people are like, well, I thought HBM was great for the AI builds, and DRAM's just a commodity, so why are they doing that? And does that say something about overall demand, overall NVIDIA demand, and overall demand in general? And the answer is probably no. These have been opportunities in the past who were saying, buy on the dips, David.
I continue to find the depths where we've been talking about this. You guys are all reporting into it, so that's not been any real news that should some a diminution of demand. Yes, the answer is no. At the same time, man, there is concern that this thing is just overplayed, and we're going to continue to sit here and question whether we're ever going to see some of these generate a real return on invested capital that is already sort of astonishing.
I think David, I think that folks who are adopting AI are going to just absolutely kick the butt of those who aren't. I saw that slide you had earlier where it's like a 1%, 10% kind of thing. And I think we're just in the early innings of companies like, oh my God, our competitor is using AI and they're absolutely destroying us. And we got to adopt it, and we got to cut sin, we got to cut consultants. Anything, we got to cut SaaS, we're just putting the price increases, we're not innovating, and figure this thing out. We're just the early innings of that.
I mean, it's all right, so lay it out for me. When do we get it? We talk about mechanics all the time. Like, when are we in the actual middle of this game?
Well, I mean, if you want to, there's a lot of people talking bubble. You just have to turn on your lunchtime show, and all those guys have been talking about bubble. And so usually, blow up the bubble completely when everybody's saying the word bubble. But it's not really as simple as that. The world is shifting towards compute. Compute is the next thing, and it's 3 years into this, and probably I don't know, 20-year trend. Everybody likes to say, oh, I was around at the bubble. Trust me, I was sitting there. And you go, muscle memory lasts 5 years, then it's going to end, and it's going to because really what's happening right now is this is the generation shift. It's going to end up a little bit of quantum as we get into the 2030s. And compute is really the field that's being oil. That's going to be bigger than oil ever was, and it's going to be bigger than everything. That's what you can think about it, David, is that it taps into the TAM for labor. It doesn't take all the jobs, it augments them, it takes stuff, and it puts jobs in places it could never be in. And it really are at the early innings. And I think that memory, for example, is a great place to be. Probably trading at single digit. So next year's earnings, maybe even mid-single.
Broadcom, Micron, AMD, and the server stocks like Dell, but not, you also cover some of the hyperscalers that you're on, like some of that Microsoft, and we talk about some of your software concerns, Oracle, these are the big spenders. And do you not see that as
Giving money to my other company. properties, it's never going to stop. It's going to be in the near term. It's like, this is not that far. These guys are all right money. They stop buying back stock. They used to be great, with regard to their cash. They were like a central bank. Now they're in the money's ready to properties. This is not going to stop. Let's not overcomplicate this. To hold that a chip stock over the long term. Giving the money to these guys, and it's not going to stop. And they all see it, and they generate cash, guys. I mean, they generate cash next year, and they buy that stock. We have all these ideas coming. I mean, these things they should buy that stock. AI and in profit. Buy back stock to these guys. These guys can't even do that.
Take it, you can write something, you can solve it. What's next for that? It's not today, but now it's here. That's it. Benefit. Ultimately, that's what it's it. You make a lot of money because enterprises need to use this technology to compete. I mean, our hyperscalers don't.
Equally, I think they're all still trying to figure it out. Each one is a little different. Like, this is like a strategy to fly for most of them. I mean, gives the definitive fee, all that. But even they are getting money to micro-based loan. They're all trying to figure out. I think that if you look at Satya Nadella, for example, the other day, like, what's he talking about? He's like saying it's got to be model agnostic and all this. You can tell the strategy is still occurring on the fly. And they're going to move to partial, like the software guys are going to move to partial consumption, partial license. I mean, I don't know about you, David, but how can they figure it out? I don't want to invest in that stuff while they're figuring out consumption versus subscription versus how much they spend. I mean, for this, you got this incentives thing where they're giving the money to these guys. It's even tough to figure out there. And even down the line, I mean, you tell me what your strategy is right now. These Microsoft big money in the cloud. So, you go down the line, and they're still trying to figure it out in the cloud. I think it's going to make a lot of money. Is the companies that adopt AI do better than others? Yes, that will help the cloud revenue. Spend more, but they are still trying to figure it out. Way. I don't see why you bother.
So that's one of the things that I say, wait a second, and it's not spending that may meditate.
You meditate, and then you probably play this, and I just they just make the cloud, there's a lot of cloud upside, which keeps the stream in.
All right, appreciate you taking the time, and thank you.
Thanks, David. Take care.
So when I'm on the show, I'll follow the living rituals because we've got to credit fund after I said this show. We're going to get to that one next. The employers, but that's going to talk about some of the fears that might be software sector. Like that stuff. And SpaceX hiring to bring this in like right? Share. And then the attitude of
Maybe it's time to find out. We do better. You do better. It's 1 million. Today, guys, we need now. Yes, guys, should be ways to minimize excessive fees so long your money stays invested in your community. If you being smart with your protection. Second opinion could make all the difference for you. Make a smart retirement action kit. This is going on now.
It's not surprising because we've seen the software stuff going on in the market, and that's really what this is about. It's building the software, but you maybe realize that it's not going to take down a follow with a $1 trillion under back.
You know, even close. And all of things to be able to say that they did so play in terms of this way into the software space for some time. They have lots of and again, it's going to keep stepping up. It's going to keep going. Just this week's been about
Well, keep an eye on those stocks that are the extreme state of set. I got for a CNBC News update. Intelligent people said that perhaps this morning. At least 40 people have drowned as people head to beaches, rivers, and lakes to escape a heat wave across Europe this week. We're at its hottest June day ever recorded yesterday, with temperatures topping out at 110 degrees in the central part of the country. And a federal judge ruled that the Trump administration broke the law, and the Department of Homeland Security maintained a centralized database containing the private information of Americans in order to verify citizenship and immigration status. In her ruling, the judge said the federal government knowingly trampled on privacy rights in a manner that threatens the sacred right to vote. Carl, back over to you.
John, thanks so much. Still ahead this morning, the CEO of Twilio is with us, just ringing the bell today. How he's thinking about the market's software fears. Plus, Meta's former head of news is now sounding the alarm on AI and the need for increased scrutiny on the information it provides. We'll talk to Kate Brown in a bit.
Look at how I got max strength generic Viagra for only $1 each from Friday Plans. I thought it might be a scam, but I was wrong. And I need to show you why. Look at this CVS receipt. They charged me $406 for 9 tablets of 100 milligrams generic Viagra. That's $45 each. With Friday Plans, I got the exact same 9 tablets for $7. That's 87 cents each. Here's how simple it is. Just scan the QR code or go to FridayPlansTonight.com and answer a 2-minute questionnaire. Select generic Viagra or Cialis. Choose any dose you need, including max strength 100 milligram Viagra and 20 milligram Cialis. Every single dose is 87 cents each. Their U.S. licensed doctor approves your free prescription right away. Your order ships free in a plain package and arrives in 3 days. That's really all it takes. Strength generic Viagra for 87 cents. The prescription and shipping are included for free. When I tried it, it worked within 30 minutes, just as well as the name brand did. I felt the power and confidence of my 20s again. My wife can't stop smiling. She said it's like I'm a whole new man. I looked at reviews, and Friday Plans has 4.7 stars on Trustpilot. Thousands of guys are saying how well this works. Don't be the guy overpaying and risking another failure. I know I'd regret it if I missed out on this 87-cent fix. It's a no-brainer. Scan the QR code or go to FridayPlansTonight.com to get your free prescription from Friday Plans and claim your 9 tablets.
See if we hold our orb high. What's good?
David Hastings for Hastings and Hastings. I can't for the life of me understand why any attorney would charge 1/3 or more to handle your accident case. That's way too much. You were the one that was hurt. We've lowered our already discounted fee to just 29%. Pay less, get more. That's Hastings and Hastings. It's about time.
Thanks for sharing. Who's next? I feel I don't really understand when it's appropriate to hit reply or reply all. We've all been there.
I stay awake at night worrying that my security service isn't cutting. I feel so vulnerable. I
I'm over here in your security insecure.
Have you taken anything today?
Department of Security and Life Safety. And with best-in-class technology and mobile service, you can rest easy knowing everything is secure.
I missed this long freaking. It was perfect long. It's just. I wasn't really paying attention, but such a nice long. Like, oh my god, I don't know how I missed it. Beautiful buying wicks right here. Off of fake breakdown through pre-market low, but where it really lines up is on the daily chart on the SPY. This 50-day moving average right here. This red line. Also support down here. That's a key area, so you would expect it to bounce off of that level when you first test it. So we gap down overnight. We're trading here. Market opens. This is that red line. I didn't change it or anything. I just drew it on the daily. This is the intraday chart. Comes down. Nice buying wicks right off of it for the long. And I missed it. I wasn't paying. Like, that's such a. I don't want to say an easy long, but as easy as trading's gonna get. 100%.
Things where 10 years ago, if you look back, we were one of the companies that really started to animate the gig economy. And I think sitting here today, we're one of the companies that's really started to animate the AI economy. And I think the way that we do that is every single company needs a way to be able to reach their customers. That means they need a communications platform to do that. Increasingly, you're seeing AI. We've got a potential data layer that sits underneath the platform. The ability to put all of those different things together and create value.
See if we can maybe.
That's what we do, and ideally, we position ourselves as sort of the Switzerland of the AI era.
Oh, we're in a whole trade line, right like that. Straight like that. I mean, it is an orb high hold over here on NQ. Tweezer bottom, perfect. But damn, I would like it down here. That would be perfect if we could get down there.
Over a very long period of time, we refer to that as customer memory.
NQ's stronger.
A persistent way to be able to create additional value, better experiences, more personalized interactions between the companies we serve and their consumer base.
Just explain it. Okay, so as enterprise adopts AI and they have their own models that they use, can't they do that communication with their own agents and customer service, or you have to play that role?
Shit, that fucking background was probably annoying as shit. Your setup works, but it didn't fill your real quantity, so you ended up making 15. Was it on a live account? Why didn't it fill your quantity? Hey, that's better than being down 15 though, right? This could have been a lower high entry. Right here, we pushed in the trade line, came up, put in the lower high. See if we pull it back to like VWAP. Should have stayed in that short. Oh, there's a nice bounce off of orb high. Is it really just gonna V bottom bounce like that, bro? Are you shitting me? Oh, you journaled it? Okay. You might look for quick longs on gold if it breaks 15-minute structure. I'll look at it in a second. Alright, let's see. Gold. MGC. You wanted to enter quick longs. What would is let me see on a 15. Is this the break of structure or what's like the break of structure? Is it this area? Like if it got up above that, or what's the break of structure? I've heard that term before. The recent high on the 15th, this high, or like its own high right here. Regains trade line, maybe. Okay. Yeah, I can see that higher lows. This could be the higher low. It puts in a higher low. Just got to be careful because you're definitely pushing up into this. You did get the rejection, but yeah, you could maybe take a long back up into it again. See if we can hold here. Or do we flush it through? Trying into our halfback on NQ. Not quite there on ES yet. This thing might get ready to lift off. We might be getting ready to lift off. There's your lift off, possibly. This is key. If we can't hold this orb high on ES, then that's a key sign that it's weak. You want to see us hold above orb and probably regain the trade line on NQ before this close. see if we can hold this here. See, this is key close right here. Because to me, that's a big rejection wick. Trying to reclaim our orb, big rejection wick. So that's why I'm a little cautious here. As he? That's dope. Hell yeah. I know he copy trades a lot of accounts, I think. Yeah, okay. Yeah, that's awesome when you can copy trade and make some good money. Hopefully you can keep it rolling. I always like seeing people do well. This is kind of big here. See what happens. Do we keep rejecting this or high, or can we close above it and then put a wick in off the top? Sorry, what's the goal? Oh yeah, okay. I'd be curious to see how this closes here. If we can get a strong close, could be a long. Yeah, if we can't hold this area, we're gonna go to lows probably. This is a pretty big area right here. Trade line's starting to come over the top. Yeah, this is a pretty important level here. Nvidia, pretty much neutral. Apple. I mean, everything gapped down. Or no, I guess not everything. Google's stuck at the close. Amazon's green. Tesla's red. Meta's barely green. Broadcom is red. Walmart is green. Maybe we could get a bounce off of VWAP. Yeah, copy trading 20 accounts would be dope. I just want to start with consistently making like $400 a day. Go from like consistently being 1 to 200 and just scaling up. Make about 300 a day, then get to 400 and go that way. Once you can do it consistently, the numbers will all take care of themselves. It's just a matter of scaling. That's why I'm so big on like the process, just nailing the process, because I know that the rest of that will come. I think a lot of people get wrapped up in like making that quick money. And yeah, you can obviously make that quick money, but if that's all you're trying to do, I guess cool. But if that's not what you're trying to do, if you're trying to actually like succeed at trading, I feel like making that quick money like that, oversizing and doing all that really fucks with your psychology when it all comes slamming down in your face and doesn't work out like smooth, you know? Trading is not smooth, so I feel like it's only a matter of time. Those people that trade all that big size, like, yeah, they may get a couple payouts, throw up some big numbers, but in 6 months, are they consistently doing it? A lot of times, no. I mean, there's people in the Discord that you'll see post like big numbers and stuff, and then, you know, like they're hot for like a week or two, a month maybe, and then they just, you never hear from them again. Wonder what happened. Yeah, that's the way to go. Just worry about mastering your setup. The more and more I do this, the simpler and simpler I try and make it. I should have held this trade longer. I should have held this initial short down into here like I originally wanted. Instead, I took profits into the trade line, and then it was just a bad entry. Impatient entry. So I took profits down into here, but then when it snapped back up here, I closed out break even. I made like $100, something, nothing crazy. Coming back into our MMD zone. Right at it on ES. I'd like to see what we do down in here, see if we get a bounce. What kind of bounce we get. Yep, just gotta master the setup. This is also kind of an area of overnight support. Right in here. But I really would like to see us flush hard down into here and then maybe even flush this low and reclaim it for a nice, like, quick scalp bounce. I feel like that could be super dope. Super, super cool, bro. I tried going live on the here in TikTok, but it said like I don't know, with OBS, like the encoder or some shit wasn't working, so I could only go live, do it on one. The dude I watch, Daniel Holmes, I would say he's like my favorite trader to watch. He trades gold. I don't even. He just trades like basic price action. But he said that like he started doing his live streams in vertical, and he said that YouTube pushes it out to more people. So I gotta look at that. Just one, see how you set it in vertical on YouTube. I'm sure it's right. It was right in front of me, but I gotta see and see if that actually is true. he said that it pushes the lives to more people. I think we're still gonna go a little bit lower here. I would say to focus on getting people to see like on TikTok there. Wait, what you're saying to focus on getting people to see you like on TikTok? There were people, so that looks more better than YouTube at the moment. I think the language barrier got us on this one, bro. I would say focus on getting people to see like on TikTok. Are you saying like the vertical setup looks better so it attracts more people? Or are you saying to stream on TikTok if I wanted to get more viewers? He was saying that it like, yeah, that it does look like it's easier on people's phones also, and a lot of people aren't even like really watching it for they're not watching go live on TikTok because there are people to talk to. Oh, yeah. I mean, but a lot of them are just fucking stupid ass little bots. Like, that's the thing. Like, it's not, I didn't have that many people. Like, people were just in and out. I've had like 4, 5, I don't even know, several, like 5 people. Like, I've done the live, 2 days? And there was like maybe 3 days, and there was like 5 people that I've actually like talked to. But like what I was doing is I would like to just do them both, but see what I think is that a lot of like during New York Open, a lot of people are going to be watching like your bigger streamers, your bigger networks like Top Step TV and all that shit at New York Open. But like maybe, people are still around trading and looking at charts later in the day, like power hour, and not necessarily looking to trade, but they're watching stuff. So I was thinking maybe streaming then because you don't have as much competition as well. But I mean, if I'm being honest, at the end of the day, I don't really care about the viewership. I'm just doing it because I trade and it's fun, and mainly because I use it to look back at my trades. Like, this is like a big part of my journal now. Being able to like mark my entries and then go back and watch it, like seeing exactly when I entered, and then being able to go back and watch like when I could have entered or should have entered. So that's like the main reason why I use it. But I mean, yeah, I guess like if I'm doing it, it would be dope to have an audience. Bro, like that, the guy, like Daniel, I first started watching him like live. I think I told you like July, like last June-ish, right around this time. And he had like just quit his job, not like so like maybe 5 months ago. He was trading, and he would make like at this point like $200, 250 would be like a solid day for him. And he had like 100 viewers, maybe 200 viewers. And now he has, obviously he makes a lot, but he like, I saw a live stream the other day and he had like several thousand. I was like, holy shit. And even he said when he first started streaming, he streamed for like 6 months to no one, like not a single person. And then like one person showed up, and then it started to get a little bit better, a little bit better. If you want audience, post on TikTok. What else? YouTube and IG is good. You're saying posts on TikTok, YouTube, and IG aren't good, or they're all good? Yeah, like me, like I just don't know really. Like I don't have like the trade recaps are just boring after a while, you know. Yeah, yeah, yeah. Right. I really think TikTok is like the best way to like attract numbers, and then you just start funneling them everywhere else. But TikTok, like I don't even, like I told you on TikTok, I have like over 100 followers from not doing shit, nothing. It's not like, and these people aren't like people like in my contacts that I follow and they follow back. Like it's not nothing. How does that work? Are most of them like, are they actual bots? Like, because what I know people like can buy followers, which I think is absolutely insane. But I don't know. I guess you do you. But how does that work? Like what are you buying? How do you know how the bots work? That's insane to me. That's like taking it way too far. But I mean, I guess this is some people just like how they make their money. So I don't know. I try and not judge, but damn. Like, God damn. Yeah, how do they work? How do like? So you buy them, and then what? Like, if they're a bot, how do they? Are they like reacting off of someone else's count? Like, I don't understand how that works. But like, what do the bots do? Like, what are their purpose? Purely for numbers? I got you. Okay, I got you. That's fucking crazy. But like, when you buy them, how? Like, what? I just don't get it. When you buy it, what is it guaranteeing you? Like, do you purchase like literally like I purchased 50 bots, and now every time I make a post, those 50 bots automatically like it? Is that how it works? I think this thing's gonna go a little bit lower still. I need to like stop and take the time and actually like set it all up to where I just stream on like YouTube, TikTok, but and like Kick and all that shit at the same time. If I'm actually gonna do it, might as well do them all. But it's that freaking it's OBS. It says like that my encoder is out of date or something, so I gotta fucking go figure that shit out. Wow, that's freaking crazy. Oh, looks like I should have held the short, huh? I thought this would go a little bit faster. We're just kind of diddling around. Really, really nice. Let's see what we do down in here. Let's see. Opening print. Let's see if we hold it. If we flush opening print, then this is a pretty freaking bear stick. Fully gave it back. Maybe we close doji here, open the next 5 minute with a down bottom wick, and then push back up into trade lines. So yeah, this is not giving the best long at 30. 60% long from, and it gives a dollar wide entry zone, and the stop loss is $1 away. So that's how you can tell, and it's only 60% confidence. That's how you can tell. A lot of, if it's like obviously the confidence level will be higher, but not only that, the entry zone will be tighter. The stop loss won't be a freaking dollar away, maybe, but the entry zone will be tighter. Damn it. I'd like to see what happens here if we get smacked down by a trade line again. See what happens here at the trade line. See if we come down here and put in a higher low maybe, and then we can reclaim trade line. Or if we get rejected again and flush through opening print on NQ, I think we're going to see our lows a day pretty soon after that. Nah, I mean, kind of similar to here. Pushed up, rejected by trade line. Once you lost it, rejected here. Tried to bottom wick and push up, rejected. Trying it again, see what happens. See if we can put in a higher low here though, because that would change the trend. Because you're putting in lower low, lower highs, lower low, lower high, lower low, lower high, low, high, low, high, higher low. Ooh, change the trend. Higher high, higher low, higher high, higher low. Boom, off. Or do we continue lower high, lower low? Do we break these lows right here? Trying to hold on ES. I don't know if we're going to be able to do it, fellas. Let's see. Yeah, we're going to flush. Open with the top wick. This thing's going lower. And there it goes. Bye bye. Bye bye. Buyers are trying. They're trying. Those buyers are trying so hard. Let's see. They trying. It's trying. It is definitely trying. Let's see here. They're definitely trying here. Buyers are definitely trying. I would ideally, I guess, like to see a close up in here, bottom wick take off. Just a little quick scalp. But the AI tool that I have says 85% shorts on a bounce up into VWAP between 735.50 and 736. So that's why I took profits there. This is VWAP. Up here, this is 735.50. It just on the top of that push, that was to 735.50. 736.10 is VWAP. So that's what it says the zone with your stops at 737.60. That's a little high, but it's going to put it outside the orb. So it's saying shorts up against VWAP. I would have a stop a little above VWAP, but I'm looking for a little bit of a push higher. And I don't even know if I'm going to take it, to be honest with you. I just took that scalp because I saw that I could steal 5 points real quick. That's why I took it. Feels like this was just waiting for a trade line to catch up kind of thing. Maybe we'll kind of grind around here as the 21 catches up, and then we'll bounce and reject off the 21. That could be a nice short. I always like 21 tests and rejections more than I like trade line. I could definitely see that happening. It's tough when I get a read from the AI saying 85% short. Because it's been. I guess I should have held a little bit longer, just been more cautious about it. Nice smackdown. Now let's see if we can push up and reject again, and then I will possibly look for a short. Yeah, patient. I might get a push to VWAP here. There's your VWAP push. It's annoying as fuck again. Annoying as fuck again. For sure. I may end it soon, but I'll wait till you get back. Yeah, SpaceX has really pulled back. The Yo, I want to see if we hold view off here. Maybe a 21 bounce off the SPY. Lines up a little better. Right with VWAP. I'll be right back. I'll be right back. Yeah, if we're just kind of waiting for trade volume to catch up here, maybe. They're about to start coming out again. Did you only take that trade on gold earlier? Was that your only trade for the day? You only got that set up till now. You might get one, but you're not sure if you should take it. What is it on gold? Let's see. What were you thinking? I mean, we are getting into the lunch hour. That's the only thing. Which I'm honestly not going to force a trade right now. This is a day that could very easily turn into FOMO for me because I fucking got out of this early, clearly. And yeah, I got out of this early, clearly. I mean, I'm still up, but it's just fucking frustrating. Okay, yeah, I could see that. Up here above the like initial balance high or orb high if you break a base above here. But yeah, there you go. I bet this may work. Who knows? But I'm gonna get off before I try and force some shit. Alright. I will probably be back tomorrow if I can get that figured out. Alright. Peace.